Good afternoon, everyone. Don't have much of a crowd, but that's fine because most people watch the videos rather than attending. And if there isn't much of a crowd, I have fewer interruptions. But I wish more people actually would come and ask questions and so on. But we'll just take it, or I'll just go from here and use what I have, and we'll get started. Anybody has questions, just let me know. Let me bring my chat window up if I can find it. Here it is. I don't know. There it is. Okay. I'll start over. As you know, this is I'm calling this webinar series Unleashing the Power of ACS Investor Software. And what this webinar series is really allowing me to do is go in and make modifications on my files that I have wanted to make for a long time, but I just didn't put the energy into it. But now I'm getting everything pretty organized for a file set, which I hope will be one of the last file sets that I have to put together. But what I'm trying to do is go for efficiency and uniformity. So I'm going to just scroll down here a few pages, and we're going to start with this right here, and it's why start at the top. This is a slide that was in there before, and these are things that most of you probably already know. Approximately 50% of a stock's movement is determined by the broad market. I've seen variable numbers, and it depends on how severe the move is, either up or down. It could be higher than that, but we just arbitrarily assign these numbers. 50%, 30% to group movement. It could be higher than that. Sometimes when a group is moving, that is really the dominant factor, much more so than the market itself. Stocks movement is due to its own factor, earnings news, etc., and so on. Starting at the top gives us insight as to where to concentrate our efforts. If oil stocks are in the doldrums, why should we spend time looking for long trades in the energy sector? It doesn't make any sense, and that's the beauty of HCSI. We can see where the action is, and then we can concentrate on that area if we're looking for long trades or short trades. Go to the strength and look for the opportunities for relatively safe entries. Now, my whole theme really about this webinar series is looking for lower risk entries. So many times when we chase stocks that everybody else is on, we're buying at or near the top. And what I'm looking for primarily are stocks that are trending and pulling back and setting up again. And I've got several views, filters, and combos that I use for that. And just remember, no matter how much analysis you do, all trade outcomes are random. Indicators guarantee nothing. We've got hundreds, if not thousands, of indicators to work with. Just look at the list and think or swim, and you're not going to really gain anything by using them. That's my humble opinion. I just gave up on those long ago, though. But if we concentrate on price, volume, support, and resistance, we have a lot greater insight, and this would include VPA. I'm going to do one more slide, and that's the end of the slides. What I'm trying to do with this webinar series is universal setups and entries. And by that I mean going from the top down all the way down from the major indexes to the ETFs to the HCSI indexes to the stocks. Just having a universal experience as far as determining where markets are and where the opportunities are to get in and or get out. Okay, the purpose, I primarily am using the 3 and 6 day exponential moving averages and volume point of control 10-10 crossovers as entry points, setup points, and if we use them across the spectrum, by that I mean using them for the major markets and ETFs and on down the line, it gives us consistency. And the purpose is to help locate early and extended moves. Just by looking at these columns, we get a great deal of insight, rather than flipping through a whole bunch of charts, about where the stocks, indexes, and so on are relative to these columns. And I'll show you that as we go through this. This works for top-down analysis and prospecting. Okay, I'm going to minimize this and we're going to get into it. Now, I've got my updating set up for every 15 minutes today rather than every 5, so it'll keep the data pretty current. But what I'm talking about with those slides is I've been going in and reworking my warehouse views so we have the consistency of these columns. Days since the 3 crossed the 6 are up or down. Same thing with the volume point of control, up or down. And that's really all we need. Now, my thinking is that nothing, I don't care if it's a market index, a stock, an ETF, whatever, nothing gets past these points going in either direction. All of the stocks, indexes, and so on, they all have to pass by these points either up or down. And if we can catch them early, that is really to our advantage. Okay? Any questions so far? All right, so let's just take a look here. Now, where I am here, I'm going to bring up my designer, is, yes, Robert, yes and no. VPOC, no, not so much. I mean, if a 3 and 6 is positive still and the VPOC comes down, and that's oftentimes just a 1 or 2 day retracement, and it can be more of a low pivot entry rather than getting out. All 3 turning negative, yeah, it's pretty good indication that weakness is really coming in. But we'll look at these individually. I'm trying to be disciplined and just going with the stop, to tell you the truth, because a lot of times you get a little pullback and it'll just reverse. I try to look closely at the charts, see what the price and volume are doing, see if we're getting any VPA flags, and then just make a determination. There is not a easy answer to that, as you know. So as we go through this, we'll talk about it today, okay? And every other webinar that's coming up. So here's where I am right here. I'm in my market analysis user groups. Now these NASDAQ sectors and S&P sectors, these are created groups just from going into the NASDAQ indexes and using the spectrum analyzer, breaking them down into sectors, and then just creating the groups. So I can look at the NASDAQ sectors or the S&P sectors if I want to do it that way. This NA is just the index, and that shouldn't be in there, so I'm going to get rid of it. But this is another thing that shows you the power of HGSI. You can make these your own indexes and really get a feel for what's going on. So let me start here, and then I'm going to do an update of some of these indexes. But these are my views, as you don't know. But I'm trying to standardize everything. So as I mentioned, these columns are available for everything. So this is the end of day, and by sorting on this, the days, since the 3 crossed the 6, this tells me that the NASDAQ 100 crossed over 23 days ago. And let's bring up a chart. Couple of charts here. And don't pay any attention to these volume numbers during intraday. These volume spikes just aren't realistic. I think the numbers in the warehouse are, but on the charts they're not. So anyway, that's a little aside. So right here was the last day that the first day the NASDAQ 100 crossed the 3. Notice there's no volume bars on here because there isn't any volume with this index. But that's another reason why I like to have both the volume point of control and the 3 and 6, because I can look at the 3 and the 6 and tell how old these signals are or when they're occurring again. Now, if there's no volume, you're going to get numbers like 788 in the volume point of control. None of these have any volume, and you can see that by looking over here at this column. It's just going to be blank. But the way around that is, this is my first folder, Major Markets Plus, includes the ETF. I'm going to go down to the intraday, which has a few different views or a few different ETFs in it. And it takes the NASDAQ composite out, because the NASDAQ composite, and I'm sure most of you know this, is not until the end of day data comes in, it screws up the chart. Let me bring up the chart. See this right here? That is because the end of day data is not in. So that's why I've gone down to an intraday look and exclude the comp. So in place of the comp, I've just got the QQQ in here. It's not the same, but I can sort on raw combo here, and I can see where the strength and weakness is today, and then I can look up and down these columns and see which of the ETFs and indexes are positive and how old the signals are. And once again, if there's no volume, you're going to get these big numbers, and you just look over here to see if it's blank. So I'm taking this down, all the way down, and I'll go through it here as I talk about this. Okay, so this is top-down major markets, and then this is Major Markets Plus with some additional ETFs. Just a broader look at the market. But once again, the consistency is here to see how old these signals are or how fresh they are. Let's see if there's anything fresh in here in the past day or so. Okay, that just did my 15-minute update. So looking at this, now I can tell right here, looking at the natural gas fund, which was a really poor performer over the winter months, that it's up, let's see. No, I'm sorry, I'm on the wrong one. This is the one I want. I want the intraday today. So this tells me where the strength is today. And this, see that now this is a view that I need to modify yet. I don't have those columns in here. I'll get this modified today or tomorrow. But this gives me this is a good way to illustrate the point. See how much more information we have with the end of day here, seeing how old these signals are. Now when I put them in here, and I thought I had done this today, I just didn't, I overlooked this one. Then we'll be able to see how fresh these signals are. And let me go back to the prior one. I want to look for one that let's look at that natural gas fund. No, that's not a good one to look at. What I was looking for is something that's up today that had pulled back and could be reversing. We'll see it in some stocks that we look at. Anyway, I have to go in here with number 2A, and I'll just add those fields. I don't want to take the time to do it right now. Okay? So, using this same logic and going down the list, if I just want to look at ETFs, I can go down to the ETFs. Here's the end of day, and here's the intraday on the ETFs, and I'm looking at the major markets plus the ETFs, or I have major market ETFs only. I don't know how many of you trade ETFs, but it's important to have these in here because some people do trade ETFs only. Once again, these are the columns right here. Let's see if we can find one. That's the dollar index bearish. Okay, here's a semiconductor ETF. That doesn't look quite right here. Let me look at it. Yeah, okay, that's right. This somebody's microphone's on. Okay, here's a good example. I see that the semiconductor ETF is up 1.29% today intraday. The volume point of control pulled back 6 days ago, but the 3 and 6 stayed positive. It's been positive for 18 days. So when I bring the chart up, I can see that this is where the volume point of control, if you look down here at the very bottom where the mouse is, this is where the volume point of control went negative. But the 3 and the 6 has stayed positive. So this is a pullback, and then we have a test for supply, and today, this is current. This is current information. The volume point of control is going positive again. So this would be an opportunity for a low risk entry if you trade ETFs in this price range. And I have shown this before, but this is the way I would look at this, and maybe make it take out the high of the prior day before I get into it. And I know my risk would be 3.41%, and put a buy stop in, put the stop in at the same time, and then you let it go and you hope for the best. But you know exactly how much you're risking. And that's the whole point of doing these low point or low risk entries. You know your risk. Somebody's got their microphone on, and I can't find my control to turn it off. All right, I don't hear it right now, so let me move on. Okay, so we're down through the ETFs. And I'm showing you all this. You don't have to go through all this stuff. I'm just showing you the consistency and the value of the 3 and the 6 and combined with the volume point of control. Now I want to do one more thing here. I'm going to go in to, and I'm going to update this folder right here. If I hold my shift key down, I can see right here that my filter is on, and I want to take the filter off just to show you what's in this folder. So all of these are in here. I've combined the major market indexes and the sectors, and I'm going to click on that, go under Tools, and I'm going to rebuild the indexes in the group. So it's going to go in. It's going in and it's rebuilding every one of these indexes in here, plus all of the industry groups. So I'm doing this from the top down. What it's doing, it's taking the data from the update for all the stocks and ETFs, or the stocks, not the ETFs, and it's putting them in these indexes so we can have a current look at the market. It usually goes a little bit faster when I'm not recording. But it doesn't take, see, it's doing the industry groups right now. Okay, that didn't take long at all. So when I click through, now I'm going top down here, but now I'm going down to my HGSI index analysis. And if I sort on this, these prices right here, just because I did the update just now, tells me exactly where these indexes are up for the day using my weighting method. The SOX is up 1.3%. So the SOX is coming back again. Let me minimize this. Notice that this index went positive 18 days ago on the 3 and the 6. I get all this information right in front of me, and there's a 0 today. This represents today. That tells me, just like the ETF that I showed you, the semiconductor ETF, this is confirming that the SOX stocks, based upon the semiconductor index in HGSI, is also showing the same thing. Here's your low volume test. Here's the pullback on the VPOC, and it is turning green again. So it's valuable to be able to do these indexes, or start with the major indexes, look at the ETFs, do these indexes, or just do these indexes. I primarily just do these indexes. And then I can go down. If I go down to number 3, what it shows me is the advancing issues versus decliners for all of the indexes combined. Here's the NASDAQ 100, 70 advancers, 29 decliners. SOX, 20 advancers, 10 decliners. All this information is right here, so you can get a feel for the internal strength of the market. You're not just looking at indexes and saying, what's the NASDAQ doing, and so on. We have an X-ray vision of what these indexes are actually doing. And if you want to take it another step further, let's just take a look here at the NASDAQ 100. I can change to the index group. This is an index, so I'm changing to the index group. And then I'm going to bring the quick pick back up. And I'm going to go down here to number 6. It says top down percentage price change up, these intraday stocks and groups. If I sort on this, what's my combo? It's a 2-part combo, percentage price change and range. So it's going to bring the strongest stocks within the NASDAQ 100 based upon this combo ranking to the top of the list. Now notice here, days down 0 yesterday, and the VPOC was down yesterday, but it's up 250 today. So what does that tell us? Let's take this into consideration. This is yesterday. Less than average, spread was above average, close was down. Combining that with the 3-6 down and the VPOC down, it tells me it was a down day yesterday, and it's bouncing back today up 2.5%. Yesterday was their VPA, yes, effort to fail. So what happened? Let's take a look at it. It pulled back. The VPOC went negative. Robert, this is what kind of talking about here. You know, if the 3 and the 6 did not go negative, well, it went negative. Yes, it did. I'm sorry. It went negative, but we have a reversal today, but this is just a one-day pullback on the VPOC. Does that make sense? So it's hard to say, do you take it off if the 3 crosses the 6 and the volume point of control? Well, let's look a little closer at this. You can see yesterday, the prior 2 days, the volume was less than average on this 2-day pullback. So that's another thing I like to look at it. If you're not getting really heavy volume and the fan is up, and the fan is still up on this, here I'd like to use my new drawing tools. That's the 100, 200, 100, 50, and the 18. So the fan is still stacked. So if the fan is up and it doesn't pull back too far and it finds support on a moving average or close to it, that's a pretty low risk entry. So today, let me wipe this off. I'm still getting used to these tools. Whoops, that's my whiteboard. Sorry about that. This really could be a buy point right here. Well, no, that's not a true pivot. A true pivot, this would have opened higher here than this. But that's close enough. Anyway, my point is that you can use the 3 and the 6. Darn it, I hit the whiteboard again. 3 and the 6 as a guideline in the warehouse views for all the way from the top all the way down through stocks, and see how old these signals are or if they're refreshing. Now here is one, Gilead Sciences. Let's look at Gilead. You can see that it crossed down 2 days ago, the 3 and the 6, and the VPOC. Let's go all the way across. There was a down bar, okay, 2 bearish VPAs in the past 2 days. This is yesterday's, and this is the day before. There was an upthrust and then a down bar. So this says that buyers are coming back into it today. But let's look at this. Let's put it in context. What do you see on this? You see that it's trading clear down below the 200-day moving average. The 3 crossed down, clear back here, popped up for a day and another day here, but the 6 stayed below the 18 all the way through here. So if you're buying this stock right now and putting it in context, you have good support, pretty good support across here. You can see every time it came down in this area, there were buyers that stepped up. But on the other hand, you've got pretty good resistance right here. It's going to have to break past resistance here. But the point is, what we saw by looking, and I should be looking at the weekly charts too. I've got it over here. Now the support looks pretty good on the weekly chart. Excuse me. I'm still not quite 100% after that COVID, but I'm pretty close. I'm going to take a drink. This stock is under accumulation. I mean, you can see it right here. There's a test on this weekly, and here is a confirmation of that test right here. And this is current information. Now, these are generated throughout the day and the week if you're using real-time quotes in the background. Okay, now let's move on. I think you understand my logic, don't you? Behind using these 4 columns. I think they're very, very helpful and very powerful if you start using them. Okay, now I'm going to go to all securities, and we're going to take a look at a few other things here. But I'm going in and modifying just about every one of these warehouse views to be consistent and to have these columns plus these Wyckoff indicators here plus the VPA signals. So, excuse me, I'm looking for consistency. Now, I just updated. By the way, I'll fix that other warehouse view after I finish this webinar, and then I want you to, those of you who are getting the files, the prepaid files, I want you to delete your warehouse and chart views tonight and download, and you'll have everything current. But let me take you through this process here. I've explained this before, but I think it's worth emphasizing because so much of the success of locating stocks that are moving up and down are due to smart groups. And these are smart groups that I put together at least 15 years ago. And they're in, I've got them A, B, C, and then these are a couple others I want to talk about today also. But I'm going to review this because I think it's important. This number A leads to the Woodward and Brown smart groups. So this is the way the smart groups looked last night at the market close. And what this does with this sort, it puts these into the correct order based upon what the industries look like. Now, I must say that since I rebuilt the industries, this industry right here, percentage price change, represents what the industry is as of, 10 minutes ago. But at night, it's going to represent what the industry did that day. Okay? And this is a 5-day look. So this is the way it looked last night. And these are stocks, 100 stocks. And this is an excellent way to stay on top of what's happening in the market. Now let's go over here and look at these columns. This is the value of looking at the columns. So I'm going to just pick, well, let's look at the airlines. This is as of last night. So Alaska Airlines crossed over 15 days ago, so I know this signal is pretty old. Volume was less than average. The spread was below average, but the close was very high. And it was up 1.9%, up 7.6 over 5 days. And there was not a VPA signal yesterday, but the day before there was an effort to rise. It has A accumulation. The ERG is really good on it. Let's take a look at this stock. So I'll bring it up. And let's make it full screen here. And this is where the crossover of the 3 and the 6 happened right here on this day. This is the most recent crossover. You can see it didn't go down below it right here. So, look, going back to this scorecard, on that day, and that was the 17th, on that day it would have said 0, 0, more than likely. On the VPOC also, it would have had an effort to rise in this column right here. And I don't know if there would have been a prior day or not. But this is how these columns themselves, in addition with whatever it said on that day, in fact, let me bring that up. What did it say? Okay, bullish. It said on that day, I'm going to point this out with my arrows. Okay, on that day right here, you can see the volume was high, the spread was wide, the close was very high, and it was bullish. So these columns over here would have said high, wide, very high, and bullish. So that's why I use these columns also. Now let me clear this. And I need to go back to my cursor. So on that day, I didn't go straight up. So this is often what happens. You buy these things and then there's backing and filling. If you put a stop in below this, if you would have bought it, or more than likely a stop below this one, the stop never would have been touched. But here's a volume pullback or VPOC pullback here. But it took several days, but then these started taking off again. Now my cursor is right here on the crosshair, and let's look over here. Spread above average, close is only mid, and you can see that, but the spread was above average. Then you go the next day, volume low, spread narrow, close very high. So when they start closing on their highs like this, it shows you that the stock's being supported. Volume was very light, you can see that, but it closed near its high. So when you start seeing several days closing near the high, you can tell that buyers are supporting it at the close. Okay, let's look at for our current one today. Let's look for one that's up today, or it was up yesterday. I don't know what Ford's doing today. Let's take a look at it. But it was high, wide, very high. Crossed over 8 days ago on the 3-6 and the volume point of control. Wow, 68 million shares yesterday. There was an effort, VPA signals, yes, effort to rise 2 days in a row prior to today. Probably pulled back to today. It did not. Well, it's down a little bit. But these columns here, I'm going to make this red. This column and this column correspond to this column and this column. And before that, there was a low volume test after this shakeout here. Once again, buying these gaps, that's problematic at times. But you can see, or I hope you can see, that these columns correspond. Now here's the crossover here, and here's the crossover on the volume point of control right here. These columns tell us something. And even before you bring up a chart, you can see if the group's moving right here, and you can see if there are VPA flags, and you can see what the Wyckoff indicators are telling you on these charts. And then you have a pretty good idea how bullish they are. Any questions? Well, I guess that's good. So let's take this same group. And this was yesterday. I'm spending a lot of time on this, I'm sorry, but I think it's important to cover this stuff. So this is the way it looked yesterday. Now I'm going to go to the same group, and I'm going to, same group, except this is the intraday version of it. So it sorts on the combo. So out of this group, look what's on top today. Tesla is up 4.22%. Now yesterday, first of all, let's go to the columns here. 15 days ago, it crossed both on the 3-6 and the VPOC. Yesterday, the volume was above average, the spread was below average, and it closed down. A lot of the leaders yesterday were getting hit hard. Let's go all the way across. Look at the volume this thing trades. Industry up today, 1.16%. No VPA signal yesterday. But the prior day, there was a test for supply accumulation is A. So let's bring Tesla up. And I'll make it full screen. And here's your test for supply from the prior day. And there's another test for supply today. 14 days ago, I think that's what I said, where it crossed over both on the VPOC and the 3-6, You can see it was crossing over the 618 a few days later. Coming up, if we look at this from a low pivot basis, okay, I'm just going to, let's say this, oh, I meant to draw that a little bit lower. Let's say that's a low pivot. And let's say that's a low pivot. And let's say that's a low pivot. Let's say that's a low pivot. What I'm showing you, and here's a low pivot. What I'm showing you is that when a stock is trending up, you're going to have a series of higher low pivots. So that's another thing you want to look for. Even though contextually this stock has been in a downtrend based upon the moving averages, when you start seeing a series of higher low pivots, it tells you that it's being supported on the way up if it doesn't come down and take out the prior pivots. So Tesla, it's made a nice run from, and what was the trigger? The 3 crossing the 6 and the volume point of control. And let's see what this, see back, okay, I'm looking at this. Less than average, below average, but the close was very high. So below average volume, the spread was not all that wide, but the close was very high. Like I said, when you start seeing high closes, they're supporting it going into the close. Now let's look at the weekly chart on this. Okay, so here is let's see if we use, I'm going to use some Frank Bunn here and hope I do this right. What you're looking for are 3 higher highs for a price trend change. Now, Robert, you still use this, don't you? And coming off of this pivot right here, this would be I'm going to zoom in on this. And I'm going to bring an arrow up here. Actually, I think I'll use a line. So even though this closed down for the week, it's a higher high than this high. So that's higher high number 1. When it takes out this high, that's higher high number 2. And then when this high here is taken out, that's higher high 3. I believe I did that count right. And so this is called a price trend change. Now, I talked in the video about using 4 charts in Thinkorswim to look at the fractals. So we can only do 2 charts. Well, no, we can do more than that. But we can. Our daily chart would be the first, then weekly, then monthly, and then yearly if you want to use that. But it makes a lot more sense to me just to put these stocks into Thinkorswim to look at the fractals. But my point is here, looking at this, you may not, because of the context of the moving averages, you may not think the stock is moving up, but if you look at the weekly chart, what does it tell us? It tells us that the trend is up based upon 3 higher highs. Okay? And you can do the same thing on a daily chart. But it's really best to, I shouldn't say it's really best, but just remember the larger time frames have a tendency to dominate. They'll move quicker within the shorter time frames, of course. That's where it builds. And I'll go into Thinkorswim here in a minute. But I better move on because I'm getting kind of bogged down. But like I said, these webinar series are going to go on for a while because I've got so much to cover. Okay, so these are the Woodward and Browns. This is what the market looked like last night at the close. This is B for the top 100 stocks above $15. So if if I sort on this, this is what the market, this is a different way of grabbing the 100 stocks. The original one I'm using is a combo that I put together years ago. This one, it's required that these stocks be up at the close. So if you look at this column right here, all 100 stocks were up at the close yesterday. It's sorted by the industry groups, and you can see where the strength was yesterday at the close. Now, if you run this right before the close, you might find stocks that you want to buy at the close, or at least set up in the open with a buy, or in the open with a buy stop. That's kind of dangerous though, because a lot of times these stocks will gap up and then they'll go back down. But this is the way it looked. But one thing that is nice about this is I can take this list. I'm going to copy these to a comma separated list. I'm going to go to the main. Here I've got my 4 charts. And I'm going to just go over here to a watch list. And I'm going to edit the watch list. Then I'm going to import these and paste and save these. And then these stocks, when the market opens up in the morning, they had the momentum going in to the close the prior day. These are stocks that will give you, or potentially give you, opportunities to get in early in the day. Now, here is one I'm sorted on the daily range, and let's say it's 8:45 in the morning. You've got your list in here, and you can come in here. Here's a 16-minute chart. You can see this stock was moving pre-market and then actually gapped down and then started moving up. But you have a built-in list of carryover stocks from the prior day. And you can quickly flip through these and see what opportunities there are. Now, see, this is why you don't necessarily want to put your order in overnight, because this is where this opened. It traded up a little bit, and then it fell back, and now it's been building its way back up throughout the day. Now, in this chart right here, I put my moving averages in just so I know the context of the stock. Weekly, daily, 78-minute, 16-minute. All right. I like that format because, well, let me bring it back up. Whoops. Wrong one. Because I can quickly start here, look here, look here, look here, or look here, look here, look here, look here. See if it's building and if there are opportunities. And this is just my carryover list. Now, you can do the same thing with the Woodward and Brown groups. It doesn't matter. But my point with this second one here, or using this group here, is that at the end of the day, the B's, stocks moving up and down, user smart group end of day. Now I have up and down, both. So if you're looking to short, you can do that. But just take a look at these from the right side here. I'm just going to look here. Notice how green everything is here on these Wyckoff indicators. These stocks were very strong going into the close. And that's why I think it's not a bad list to carry forward if you don't want to spend a whole bunch of time, and then you can come back here. You can flip back and forth between Thinkorswim and here and see how old the signals are. Here's NR Energy with crossovers yesterday on both. Let's see if it did anything today. But I find this information on these columns invaluable. Now, this didn't do anything. Look at the context. I mean, you got all kinds of resistance across here. Ugly looking chart. Okay. Now we're getting close to the close, so let's do this. Let's go to the next group. And like I said, this group number B is what the market's going to look like at the end of the day. So we're going to go to C right now, and we're going to rebuild these. First of all, I don't think I need to rebuild the industry groups. They're not that old, but I do have to go in and I need to rebuild my user smart groups. Because what I'm doing is I'm going in there and I'm pulling out the current prices, and we're going to get that list, the current list of stocks that are $15 and up, and then also 1 to 15. I'm going to probably go over a little bit today. I don't know where the hour goes. Okay, so let's go to C. And it's updating. That's why I'm getting the hourglass. I should have just turned that off, but that's all right. Got a lot of things working here. Come on. 2 charts open too. Okay, so this is $15 and up intraday. I rebuilt the indexes a while ago. And this is the way the indexes were. But this is the way the market looks for the top 100 based upon a filter and a combo. And everything has to be positive. And you can see that it is. Here's one that's up 62.59% today. And what is this? Carvana. Are you kidding me? Tom, yeah, I'll include that. I thought I had done that. Anyway, Carvana is up. Let's look at Carvana from yesterday. Less than average. This is yesterday's information. Less than average, above average, and mid. Compare that to very high, wide, very high, bullish. Look when this crossed over 8 days ago on both the. Right here was a crossover on both the 3-6 and, well, it must have been right here, must have crossed over because the VPOC crossed over the same day. Basing, contextually, a lot of support, or intrinsically, a lot of support right here. And what do we have? We have 1, 2, 3 VPA flags as it's starting to take off. I just zoomed in with my alternate 1 key. We also have pocket pivots here. Look at the volume in here today. Alternate news. I'm going to go to bar chart. Better than expected second quarter guidance. Okay. Now we know why. But the spreadsheet, or warehouse view, spreadsheet, whatever you want to call it, was telling us that we should have been in this stock already based upon several factors. VPA, moving average crossovers, volume point of control, pocket pivots, and so on. It's just up to the 200-day moving average right now. Let me bring this up again. Now it really held firm through here. Let's put a crosshair on there. Look at that. I mean, there weren't many distribution days, and the red days, the red bar days, Look how low the volume is on those days. So there's very little selling. And then it just started building momentum all the way up. But this is the way, right now, as of right now, $15 stocks and up are looking. Now, this is a group, just like I did with these stocks right here. Most of them at the close will go into tier B that I just showed you. Let me show you that again. These stocks are going to move up. When I run the end of the day, it's a very similar filter going to move up into the B category here. Woodward and Brown, B category, which is C category during the day. I hope that's not too confusing. But you can prospect during the day using these up and down and looking at these crossover days. Now, if you see negative crossovers like this one, Arista Networks, crossover to the downside 2 days ago, and the VPOC 6 days ago, but it's up 429 today. No VPA flags. What does that tell you? Above average yesterday, wide but down. What does it tell you? It tells you that buyers are coming into a stock that pulled back. And there it is right there. So just by looking at this scorecard, the intraday scorecard, you don't even have to look at the chart. Well, of course you have to look at the chart, but you know that this is a stock that is seeing support today. Okay? Now, I hope you agree with me that these columns are very useful, because that's all I'm essentially using, along with the VPA and this information over here. But these tell me how fresh or how old the signals are. Let's see what the oldest signal here. This is probably a buyout. No, I don't know if it is or not. Wow, it was a sellout. Look at this. Look at this series of higher low pivots all the way up here, though. But there's buyers coming into it today. Okay, now let's go a little further. I didn't get to this last time, and I want to get to it this time. Does all that make sense to you, or is this still too confusing? I realize I'm showing you a lot of stuff. Now, let's look at D down here. Bullish end of day watch list, 25 stocks. So these are the stocks which are showing a pullback on the 3-6, but not necessarily on the volume point of control. You can see the volume point of control is positive here. This is last night's data, but showing a pullback. And yet the percentage price change was up on Lexicon Pharmaceuticals. I don't know why. Let's take a look here. Okay, it was still negative yesterday, and it had gone negative to this point, but it's positive today. That's why. Let's see if I can find something. Anyway, these are end of day, and on this particular view, I decided to put the intraday column in here also, just so you can see how these that pulled back end of day are doing intraday. So you can just look at one spreadsheet. So this one's a little bit different. But you can see if there were VPA flags over here or not. And here is CVRX. So why did it appear in here last night? Well, because 6 days ago or 7 days ago, the 3 went down below the 6 up here at this point. And then you can see there was accumulation of low pivot here, confirmation of that pivot, and then it moved up today. There was a pocket pivot here, pocket pivot here. The volume point of control was positive right here. I put this in here for one reason and one reason only. I wanted to give you a predefined list of low risk, potentially low risk, I'll say potentially, low risk stocks. So if you don't want to spend a whole bunch of time prospecting, if you just want to come in here and click on that, that is number one, undercut end of day. Now, this darn thing must be updating again. I thought I changed it to 15 minutes, but we'll wait for it. But the next one is the 3 crossing the 6 with a 2-day window. So look at that, and then same thing. You can see that this column, they crossed over with a 2-day window. 0 is crossover day, 1 is the prior day. Now, here once again, I did the same thing here. I put the intraday in here so you can see how these are doing. Somebody left me a message I need to read over here. Okay, let me bring this over onto the screen. This is from Duke Jones. Hi, Duke. Thanks, Ron. Incorporated some of your screens into my daily mix from seminars from earlier in the year, and they have been very helpful. As an example, one stock that kept coming up was SIBN. A few cardiac moments, but has been a great contributor to the portfolio a couple of times this year. Currently in from a signal in early May. Have a PSR chandelier stop to see how much juice I can squeeze out as it's close to my target. Well, thanks, Duke. Let's take a look at it. SIBN. Yeah, it sounds familiar. Whoops, N, not M. Okay. Is this it? Must be. All right, the fan's up. It's a strong stock. Here's a pullback on it. Put my crosshair on here. Here's a VPOC pullback. It stayed above the 18, found support at the 18, but the fan was in place. And then look at this as, yeah, here's your cardiac moments, right, Duke? You can see that there were volume pocket pivots all along here as buyers came back into this stock. Right here also. Let's see, when did you... Early May you bought this? Okay, well here's May right here. I'm sorry, that's March. Early May. Did you get it in here somewhere? Right in here somewhere? Okay, great. Okay, so let's see what the potential buy signal. Well, here's the pullback, and then here's the VPOC and the effort to rise going up, the 3 going up through the 6. Perfect. This is why I keep saying that no stock or ETF can go anywhere without the 3 going up through the 6. And if you put these stocks into a chart like this, so you get a view of the context. By context, I mean relationship to the moving averages, and then you can see the support. Now, support is what's called intrinsic. What's the intrinsic risk? Well, if you have good support and then good contextual setups, you can come up with a winner. Well, thanks for pointing that out. That's a good-looking stock. Okay, these two, and then I'm going to finish this up. Oh, I've got 2 more things I want to talk about, sorry. Okay, this is the same thing with intraday. 25 stocks, but if 25 stocks don't qualify, then you're going to get 17 or whatever. And then here's the 3 crossing the 6. Notice these are all up. This one, there's only 1 down. And these are stocks that pulled back, but you can see the pullback column is right here. The 3 down through the 6, but this is up 6.26% today. So let's look at this stock. Okay, here's the VPOC down again. Here is a low volume test. The 3 is crossing the 6 today. You can see it right here. I guess I don't need to bring an arrow up. And then there's an effort to rise. So this is a nice pullback. Fan is in place still. Here, I want to show you my disappearing arrows. I'm getting used to this drawing program still. You can see they disappear. Anyway, there's the 18. So the fan is still in place. Now this would be a low risk entry. Why? Because you could put a stop under this moving average or under this low pivot right here. By the way, this is a pivot because this is higher than this low, and then this one is higher than the high of this. So that's a true pivot. So that is TGTX. Keep an eye on it. It might be a winner. The group is flat. Let's look at the chart above it. I need to get back to my control here. Okay, it's outperforming the S&P a little bit, but it's outperforming its group, and the group is flat, and the green line's up, so it's outperforming the group a little bit. You can see why I have a lot of charts. It's just easy to flip back and forth and get different perspectives on these stocks. Okay, so those are the intraday. Let's go down here. And I'm going to show you this. Three and six are negative right here. And the volume point of control is up and the fan is up. So what I'm doing on here, and this is my thinking, is that if the VPOC is turning positive and we get a full pullback on the 3 and the 6, there's a possibility that these stocks could go up. Now I'm just going to, on this one, I did put a separate intraday scan in here, but this was last night. You can see the pullbacks on the 3-6 and how old they are, and then you can see that the VPOCs are positive. Let's see if these did anything today. Several of them are up today. That's the one I just looked at, TGTX. Let's look here at, actually let's go to this one, because it, Jack in the Box, 13 days ago the 3 went down through the 6, but the VPOC was positive 2 days ago. So let's look at Jack in the Box. You can see here's a low pivot here, but this was such a large candle. I wouldn't have bought it here. But now here's a low pivot here, and this is a true pivot because this low is lower than this, and then when this took out the high here, that would be a buy on Jack in the Box with your risk just below that low pivot. Thanks, Tom. So that's one. And the next one is 3 and 6 positive with the VPOC up and the fan is up. So these are just low risk entries with both the VPOC and the 3 and 6 up. Now, these are not going to be as fresh as signals. So let's look at these. And when you see empty columns, that means that they're not being supported by Thinkorswim. But these are stocks that crossed over and started to make their move a couple of days ago. So here's the crossover here, right here. And then there was an effort to rise yesterday, and then there was a continuation today. Now it's getting up in the resistance area. But I would still, consider this a relatively low risk entry. But it's too low. I mean, you missed it. I mean, I missed it. Back here, this plus the confirmation and then the crossover day, that's a good entry day. You don't know it's going to follow through here. Everything's random, but it did follow through. But now you'd be chasing it. But you can put these stocks that are moving in a watch list also, the best looking ones, and see if they pull back again on the VPOC. Just use your scorecard and look at these columns every day and see if they're pulling back or not. Okay, I'm about talked out. I went 10 minutes over, but that's okay. Robert, are you still on? I don't know if Robert's still on or not. He had a question about... I'm going to answer it anyway. He asked me why, when you do an update, an intraday update with the user smart groups, why it's still yesterday's date. Well, that's because it's comparing the current data to yesterday's data. That is the database, the last database update. Now this is updating again, or something's going to show through here. So that's why that is dated 6/7 rather than 6/8. Now, if you go here, these showed up yesterday. This is that's end of day. I'm sorry, I wanted to look at the instant watch list. This is intraday, but this is yesterday's date because it's comparing it to yesterday's data. Now, if you want current data in these, and I don't recommend doing this because it takes time, there's really no reason to. You just go in and you select update and include the intraday data from today, and then this, when you open these up again, it's going to say 6/8 rather than 6/7. But that's why these dates still say 6/7. Okay? I think Robert had to go, or he got tired of hearing me talk. So anyway, any questions? If not, I'm going to shut it down. And I hope that all makes sense to you. Don't worry, I'll be repeating it over and over. We'll be looking at charts from now on. As long as this webinar series goes on, we'll be talking about context. We'll be talking about contextual risk. We're going to talk a lot more about setup risk, how much you're risking on each trade, and so on and so forth. Oh, Robert, you are there. You're welcome. I'm glad you're enjoying this series. I actually enjoy doing these, believe it or not. I spend so much time putting these together that it's really just a matter of showing you what I'm doing, and without putting a ton of preparation into it. Well, good, John. Okay, well, thanks, everybody, and I'll see you next week. I'll get another video out maybe over the weekend about what I want to emphasize or talk about. But what you're seeing here is what I'm building on. I'm not going to give you a whole bunch of new stuff. We're going to be building around these columns, especially, and the crossovers. And Duke, thanks for bringing that up about that stock. That's very helpful. If anybody else comes up with winners like that, just let me know and we'll show them during these webinars. Okay, thanks a lot. Bye.